Okay, let's unpack this. Gold, it's been this symbol of wealth, stability, really for centuries, right? You see it everywhere. Ancient treasures, central banks today, maybe even, in your own family heirlooms. But in this world of really complex investments, algorithms, crypto flying all over the place, why does gold still shine? That's exactly what we're doing today. We're doing a deep dive into the different ways you can strategically invest in gold. We've been looking through the insights from What Are the Different Ways to Invest in Gold by Doug Young. It's an independent educational resource from the Gold IRA Company's bulletin. And our mission really is to pull out those essential nuggets, the surprising facts, the practical tips, just helping you, the listener, feel properly informed, empowered even to think about gold for your own financial strategy without, feeling totally overwhelmed by it all.
Yeah, and what's really fascinating, I think, is just how relevant gold still is. It's not just some historical thing. It's actually a critical safe haven asset right now, today. And the source materials we're using, it lays out a pretty clear path, from actually holding physical gold to things like gold ETFs, mining stocks, mutual funds, even gold IRAs. We'll try to connect the dots on how each one might fit into a modern portfolio.
Okay, so let's start right there. The fundamental question. Why is gold so often seen as this protective asset? What does that actually mean for someone who's looking to, safeguard their wealth?
Well, gold's role as a safe haven basically means it tends to either hold its value or sometimes even increase when things get rocky, like during economic uncertainty or geopolitical tensions. Think of it as a shock absorber for your finances.
Okay, a shock absorber.
Exactly. When other assets might be, tanking, gold often provides this crucial counterbalance. And beyond that, it acts as a really powerful hedge against inflation.
Ah, inflation. That's a big one.
It is. So when the purchasing power of your currency, your dollar, goes down, it buys less. Gold's value often rises. It provides this cushion, against your wealth just eroding away. And it's not just that it rises, it's the non-correlation, the fact it often moves differently to traditional assets. That's its real power.
And unlike, say, stocks or bonds, what we often call paper assets, right? They're just represented by documents. They rely on institutions. There's something, I don't know, uniquely reassuring about actually holding physical gold. It doesn't depend on a company's profits or a government's stability in quite the same way. It's something you can touch, see, feel. Plus, an ounce of gold is worth roughly the same globally. New York, New Delhi, doesn't matter.
Universality is key.
Exactly. It offers incredible liquidity, really, and flexibility in your portfolio. So, okay, if gold offers this kind of timeless protection and its unique, tangible quality, the next logical step for a lot of people is, right, how do I actually get this ancient asset into my modern portfolio?
Precisely.
And here's where it gets really interesting. Let's explore the different routes you can take. Each one's a distinct path, right? With its own pros and cons, just like our source lays out so clearly.
Absolutely. So the most straightforward way, the one people often think of first, is purchasing physical gold. Bars, coins. This gives you direct, tangible ownership. And honestly, there's a significant psychological comfort there, especially when markets feel shaky.
I can see that, the feeling of having it in your hand almost.
Right. But that sense of security, it does come with practical challenges. You have to think about secure storage. We're talking home safes, maybe bank safety deposit boxes, or even professional vaults. And then there's the added cost of insurance to protect that investment.
Right, storage and insurance, that adds up.
It does. It's a strategic trade-off,
Right.
really. You get ultimate control, but you have the logistics, the cost of securing a physical thing. Now, while that comfort of physical gold is undeniable, those storage and insurance headaches, they're real. And that's exactly why many investors who want similar exposure but without the physical burden, they turn to gold exchange-traded funds, ETFs.
ETFs, right, we hear a lot about those.
They're just a convenient way to get exposure to gold prices without actually having to store the metal yourself. They trade on stock exchanges, just like regular stocks, and they track the price of gold. Generally, they're cost-effective, offer high liquidity, easy to buy and sell quickly, and accessible for pretty much any investor.
Okay, sounds convenient. But what's the catch?
Well, the crucial thing to remember is, with an ETF, you don't physically own the gold. There are also counterparty risks. Basically, you're trusting the fund issuer, the company running the ETF, to actually hold the gold they say they do.
Okay, so a trust element there.
Yes. And like most funds, there are management fees, which, eat into your returns over time. But that liquidity is a big draw. You can potentially jump on market moves much faster than you could trying to sell physical gold.
Makes sense. What's next?
Then we move to gold mining stocks. This is different again. You're buying shares in the companies that actually dig gold out of the ground.
So investing in the miners, not the metal itself directly.
Exactly. And this can offer what's called leverage to gold prices. It means the value of these stocks can sometimes swing more dramatically up and down than the price of gold itself.
Ah, so bigger potential gains, but also bigger potential losses.
Precisely. It amplifies things. Your returns could be higher if gold prices rise and the company is well run. But you're also taking on significantly higher risk. It's tied to things like how efficient the management is, their production costs, political stability in the countries they operate in.
Wow, okay. Lots of variables.
Definitely requires careful research. It's not a simple proxy for the gold price.
Got it. What else is on the list?
Another option is gold mutual funds. These work like other mutual funds. They pool money from lots of investors to create a diversified portfolio.
Huh.
This portfolio might hold a mix of things, maybe some physical gold, definitely gold mining stocks, perhaps other related securities.
So diversification is the key benefit there.
Diversification and professional management, yes. It's more of a hands-off approach if you prefer someone else to pick the specific stocks or assets. But just like ETFs, these mutual funds come with management fees that you need to factor in, as they'll impact your overall returns.
Okay, makes sense. Fees are always a factor. And the last one.
The last one, and it's become quite popular, especially for retirement planning, is the Gold IRA.
Right, the individual retirement account, but with gold.
Exactly. It lets you include physical gold within your tax-advantaged retirement portfolio. It operates under similar rules to a traditional IRA, but instead of just stocks or bonds, it holds physical gold, like coins or bars, managed by a custodian.
So what are the main draws for a gold IRA?
The big benefits are usually seen as diversification for your retirement savings, potential stability, because gold often moves independently of stocks and bonds, and again, that sense of security from holding a tangible asset, even within your retirement plan. It feels different to some people than just paper assets.
Okay, so we've covered the what? Physical, ETFs, stocks, funds, IRAs, a lot of options. Now, let's pivot a bit to the how. How do you strategically approach this? It seems pretty clear that just jumping in isn't the way. You need a plan, right? It's not just what you buy, but why and how it fits into your bigger financial picture.
That's exactly right. A plan is crucial. And the very first step in crafting that strategy is setting clear financial goals. What are you actually trying to achieve with gold? Is it mainly about preserving wealth, generating income somehow? Or are you looking for long-term growth?
And how does the goal affect the choice?
Well, for example, if your main goal is just preserving wealth, keeping what you have safe, then physical gold, or maybe gold ETFs might be a better fit. They tend to be more stable. But if you're aiming for growth, and crucially, you're comfortable with higher risk, then maybe investing in those gold mining stocks could align better. Though, as we said, you have to accept that amplified risk.
Right, risk tolerance. That's the next piece, isn't it?
Absolutely vital. You need to honestly assess your risk tolerance. Gold investments, as we've seen, come with different levels of risk. Physical gold is generally seen as lower risk, great at holding value, but probably less potential for explosive growth. Mining stocks, even ETFs to some extent, can be much more volatile. Their prices can swing quite a bit.
So how do you assess that? Is it just about how much fluctuation you can stomach?
That's part of it, sure. How much up and down can you handle without panicking? But for gold, it's also about understanding its role. Are you okay with an asset that might just sit there or even dip while your stocks are soaring? Its value often comes from being that defensive play, moving differently. Can you accept that role in your portfolio, or are you purely chasing returns?
That's a good point. It's about its function, not just its potential gain.
Exactly. And finally, your time horizon matters a lot. Are you thinking short-term or long-term?
How does that change things?
Well, short-term strategies might focus more on trying to time the market, capitalize on price swings. For that, you need liquidity. So ETFs and maybe stocks are more appealing because you can get in and out quickly. But for long-term investors, maybe those looking decades ahead towards retirement, the stability of physical gold as that long-term hedge, that store of value against uncertainty, becomes much more attractive.
Okay, so goals, risk, time horizon, that builds a strategy. But beyond the strategy, there are these practical things, right? The nuts and bolts you need to consider before actually investing.
Absolutely. These practical factors can really impact your experience. One of the biggest is understanding the impact of economic conditions. Things like inflation rates, interest rates set by central banks, the value of the dollar, they all heavily influence gold prices.
Can you give an example?
Sure. Think back to the 2008 financial crisis. As the traditional financial system looked shaky, investors flocked to gold as a safe haven. Its price surged because of that widespread economic uncertainty. Understanding those dynamics helps you see why gold might move and when it might be more or less attractive.
Okay, so keeping an eye on the bigger economic picture is key.
Definitely. And if you are considering physical gold, we have to come back to storage and security. It's paramount. Your options range from, a really good safe at home to a bank safety deposit box or even specialized professional vault services.
What are the trade-offs there?
Well, cost is one,
Hmm.
convenience is another, and the level of insurance and just your personal peace of mind. A home safe is convenient, but is it secure enough? Is it insured properly? A bank box is secure, but access is limited. Vaults are very secure, but cost more, and you need to weigh those.
Yeah, I remember you saying it felt like something from a spy movie, but it's a very real decision.
It is. And finally, always, always factor in the cost implications and liquidity of whatever method you choose. All gold investments have costs. Storage and insurance for physical. Management fees for ETFs and mutual funds. These costs directly reduce your net returns, so you can't ignore them.
And liquidity.
Right. Physical gold can be less liquid than stocks or ETFs. It might take more time and effort to sell it at the price you want. ETFs and stocks, you can usually sell very quickly during market hours. So understand how easily you can access your capital with the method you choose.
Wow, okay. It's clear that information really is power here, which underlines how important thorough research is before navigating this market.
Indeed. You really need to do your homework. We advise regularly analyzing market trends and forecasts, look for reports, analyses from reputable financial institutions, from experts in the field, and keep a close eye on geopolitical events, economic indicators, things that can move the needle on gold prices. Being proactive helps you stay informed.
Where do you find that kind of information?
Well, besides general financial news, expert recommendations and publications can be invaluable. Look at what respected financial advisors or economists are saying. And specifically for gold, publications from institutions like the World Gold Council are great. They provide really deep insights into global supply and demand, which shapes the market.
And the source we've been drawing from today.
Right. The information we've discussed, it comes from Doug Young. He's a gold IRA and precious metals analyst. His background is pretty extensive, over 20 years in financial markets, more than 15 specializing in gold IRAs. He was a financial director for 16 years. Plus, he's written over 500 financial research articles, evaluated over 80 gold IRA companies.
Okay, so he definitely has the credentials.
Absolutely. It underscores the credibility and depth here. His work really emphasizes that gold's value isn't just about price, but its unique role in portfolio stability, especially when traditional assets are struggling.
So we've really covered a lot of ground today. From the tangible comfort of holding physical gold all the way to the strategic diversification you might get from a gold IRA. I think the key takeaway, really, no matter which path someone considers, is aligning that choice with your own personal goals, your financial situation, and importantly, your comfort with risk. So what does this all mean for you, the listener, as you think about your own financial landscape?
Yeah, if we connect this all to the bigger picture, gold, okay, it's an ancient asset, but it's still a dynamic, relevant part of modern investing. It just requires thoughtful consideration. You need to understand its unique characteristics and, crucially, keep a keen eye on what's happening in the global economy. Its role isn't always about chasing the highest returns, but often about providing that foundational layer of resilience.
So as you, the listener, reflect on your own financial journey, here's something to mull over. Consider how gold's historical role, that hedge against uncertainty, how might that evolve or maybe even intensify in our increasingly interconnected, sometimes volatile global economy? Where might gold fit into your pursuit of financial security? Not just as another asset, but maybe as a strategic anchor in what often feels like unpredictable waters.